Alright, so in this video, I will teach you the ICT weekly power of 3 trading strategy. This one is one of my most powerful strategies and one of my most favorite strategies that I use. It is the closest strategy to Holy Grail. I know there is no Holy Grail in the trading industry, but this is as close as you can get. Alright. You have to watch the video entirely in order to understand everything, so make sure you don't miss out anything. All right. This is a very mechanical strategy. I have explained the strategy before on my channel, but in that video we used the economic calendar. However, in this video, we are not going to use the economic calendar, and we're going to keep this strategy as mechanical as possible. So let's start. Before we start, the price has dropped down to $97 for my course and my Discord. It was at $200, so a lot of people emailed me. They said they couldn't afford it, so I just dropped it down to $97 for a couple of weeks. So yeah, you can get it right away. And we have the private Discord server, some videos, a lot of videos actually, and then this proof. So make sure to check this out. Anyways, let's start with the video. Number one rule is we mark out the opening price of the weekly candle. So right here, what I've done is, let me just correct it like that. So we have the opening price of the weekly candle. So make sure you mark that out. Now, once you have the weekly candle opening price marked out, what you want to do is you have to drop down to 4-hour time frame and mark out the closest high and low before the opening price. So this is the opening price. We want to look to the left side before the opening price, not after. Okay, so this going to the right would be after, and to the left is before. I hope that makes sense. Now, you have to mark out the closest high and low before the opening price. So this is the closest high that I've marked out, and this right here is the closest low. All right. Now, number 3 rule is we wait for a raid on a high or low on the 4-hour time frame. So now when you have the weekly candle opening price marked out, we have the closest high, we have the closest low. We are simply looking for price to either take out the high or the low. Okay, very simple. Now, the next rule is we wait for a raid on the high and low. So let's say in this scenario, price takes out the low, right? So price takes out the low here. Now, once price takes out the low on the 4-hour time frame, the rule number 4 is that we look for a market structure shift on 15 minutes time frame. All right, so we are using 3 time frames here. On the weekly, we marked out, of course, the weekly candle opening price. Then on the 4-hour time frame, we mark out the closest high and low before the weekly candle opening price. To the left of the weekly candle opening price, if that makes sense. Now, once we get the raid on the 4-hour low and high, we simply drop down to 15 minutes time frame, and we are then looking for a market structure shift. So essentially what we are getting here is accumulation, manipulation, and then distribution. Every candle has power of 3, but the weekly candle power of 3 is the most powerful one. All right, if you can utilize it, if you can use it properly, you will see insane results in your trading. All right, so we look for a market structure shift. Once we have the market structure shift, we can use different entry models to take our entry from. So we're gonna have a breaker block as our entry point. We could use an auto block or even the fair value gap. It really depends up to you. Once you get the entry during kills-on hours, and that is necessary, you have to get your entry during the kills-on hours. You can simply target the closest take profit level, which could be any high that is above your entry level, right? And make sure it is at least giving you 1 to 2 RR, or you can target 1 to 3 RR as a fixed risk to reward ratio. Very simple and very mechanical strategy. Guys, we are not going to look at the economic calendar like we did in the previous video. We're simply just keeping it as mechanical as possible. We mark out the weekly candle opening price, then we look for a raid on the closest high or low, then we look for a market structure shift on the 15 minutes time frame, and then we take our entry. Let me give you guys some examples, and then I will end the video. All right, guys, so here is example number 1. I'm looking at NAS 100. This is my most favorite asset to trade with this strategy. So yeah, you can test it out yourself. All right, so let's study this weekly candle. Okay, so let's mark out the opening price of this weekly candle, which is right here. Now let's drop down to the 4-hour time frame here, And let's zoom out a bit to make things clear. All right, so notice this. So this indicator, this identifies the highs and lows. Go to indicators here, type in fractals by Rachel T, right? And then you can use this indicator, and this can like provide you with accurate highs and lows. So what is this? We have the opening price right here. As you can see, I've marked it out like that. Now look to the left of it and identify the closest lows and highs. So the closest low is right here, and the closest high indicated by this indicator is right here. Now notice what happened here. We have a Judas swing, we have a manipulation to the downside, and we take out this low here below the opening price like that. Now let's go and study the 15 minutes time frame. All right, so going back to the 15-minute time frame here, this is when we get the manipulation. Now we are looking for a market structure shift. So what do we have here? Right here, this is the high indicated by the indicator. We get a market structure shift. Now I love to take my entries through auto blocks. So right here you can see we have consecutive bearish candles that take out liquidity. So that is my auto block in the discount. Price comes back into this auto block, right? Taking out this failure swings right here, right? Liquidity, right? We take out that, we have our entry from the auto block during kill zone hours, which is very important, and we expand to the upside, taking our closest take profit level could have been this, right? But you could have also targeted this level right here. Very simple and mechanical strategy, guys. Of course, this is hindsight, right? But when you're going to test it out through yourself, through backtesting, right, you will find insane results. And I'm not even kidding, all right? I love to teach, and I'm not that type of a person who would teach you absolute gibberish just to get some views. I don't care about views. I'm teaching this because it solidifies my learnings that I've learned everything in the past years, and I also in general love to teach. So just enjoy this, whatever it is. Okay, so beautiful example, beautiful entry, very solid. Let's move on to the next example. All right, guys, so here is example number 2. I'm looking at NZD JPY on the weekly time frame just to confirm that it works on everything, so you don't have to worry about anything. All right, so let's study this weekly candle. Let's mark out the opening price of this weekly candle. So this is right here. Now let's drop down to the 4 hours time frame. Over here, where you can see we have the weekly candle, weekly opening candle, right? So one thing to make sure is when you drop down to 4-hour time frame, you have to consider this candle, okay? So this is the opening candle. First off, you mark out the opening candle, opening price, sorry. You mark out the opening price, and then you have to wait for the candle closure of this first candle. Once the candle closes, then you look to the left side, okay? And then you mark out your highs and lows. That is the best approach. So we mark out the the opening price. This is the high to the left, and this is the low right here. Now let's go ahead and study what happened here. Okay, so let's go to the 15 minutes time frame now, and we need to study what happens. So we take out the high here, we get no market structure shift. Now price comes back, raids this high again. Now we're looking for a market structure shift. Now sometimes the indicator will mess up. So as you can see right here, if I mark this high out, this low out, you can see that this is a clear low. We have a candle to the left that is not shorter than this, and we have a candle to the right which is not shorter than this. So this is a clean low that we can consider as a market structure shift. All right, so we have higher high, higher low, then a higher high over here. Now we're looking for a market structure shift, and that happens right here. Now, as I said before, I love to take my entries from the auto block. So you can see this auto block right here. This whole move to the upside took out liquidity, and after that we have a shift in market structure, and that is our auto block right here, residing here in here. Okay, so my entry would simply be on this auto block. Stop would go above the high, and I would simply look to target 1 to 2, right? This is the target here. my closest target that I can target, and we will go for 1 to 2 in this example. So we get our entry, right? Price goes into a little bit of drawdown, but once the New York session kicks in, we see the price go down and hit and just expand to the downside like that. So you can see the power of this strategy. Just make sure that you are considering the right market structure shifts here, because actually even if you considered this, if you waited for this market structure shift, right, it would have still worked out. You could have gotten your entry here, but since we were out of the kills on ours, I would have not taken this entry. However, yes, once we got this second, market structure shift here, since we are trading the JPY pair, we can trade the Asian session for this. So I would have simply taken my entry from this auto block here, and you can see the clean expansion to the downside. This is very mechanical and very easy, guys. Let's move on to the final example. All right, guys, so here is the last example, looking at NAS 100 on the weekly, of course. So let's study this candle here. Market the opening price. Now let's drop down to the 4 hours time frame. Now what happened here? We have the opening candle, so now we want to mark out the closest high and low. So the closest high is right here, opening candle and opening price right there, right? And we have to wait for the opening candle to close. Now this is the closest low here, and we can also mark this out just in case. Now let's drop down to the 15 minutes time frame. Now we took out this low and this low here as well. Now what we're looking for is a market structure shift, and over here, this right here is when we get our market structure shift. The candle closes, right, and we are in the kills and timings. So since the auto block is huge, I'm going to use the last candle. In this example, this last candle took out the liquidity, and then after that we had a market structure shift. So that is our auto block. Make sure we're in the kills on timings, and my entry would be off this auto block right here, right? My stop would go right below this auto block, and I would simply look to target 1 to 3 as per my fixed risk to reward, right? So simply going for 1 to 3 like that, or you could have targeted this fair value gap around here. So that's pretty much it for this video, guys. Go and backtest this strategy. Just, of course, these examples were hindsight, right? But it works every single it doesn't work every single time, but it is there every single week with all of the pairs and assets. Go and test it. I'll see you guys next weekend. Take care. Goodbye. Mwah.